Analysis like every Wednesday. Would like to brief you up with the mid of the week analysis from home this time. That's why the background is a bit different. So before I brief you up about everything that's going on around so far this week and so far today, just allow me to double check that we are broadcasting as usual. I just got a notification from YouTube. Perfect, loud and clear, so you can see me. And soon as you will be able to see my screen as well. And since we are here, let me just okay, you can see me. Time to see my screen. Actually, see my screen a bit. Um, just Okay, I have informed my colleagues regarding a notification to all of you for joining us. Welcome, Adi. You are the very first person here. Allow me to ask: are you joining us from Indonesia? Did I got that right? Okay, so let's wait for Adi to join. Guys, before we officially start, because we've started, I'd like to remind newbies over here that this is your session. It's called live analysis because obviously I'm going to brief you up with anything important going on around the market, but it's your session, as I keep saying. So ask me anything you want, fundamental, technical, something that you don't understand, an asset that you want me to technically and fundamentally analyze. Okay, this is your session. So feel free to ask anything you want in regards to the markets. If it's something else, like about your account with HFM, about your deposit and withdraw with HFM, please, we have a session tomorrow in Instagram, question and answer live. So me and my colleague, actually, Marco and I, will try to reply to all of your questions. So instead of wasting time today, I prefer any admin questions to be set tomorrow with our Instagram QA live streaming, question answer live streaming. So a lot of people just jump in. Pakistan, thank you, Osu, thank you for the comment. Ghana, Nigeria. Maggie already, I got the point and already posted the Euro cat and pound Oz question. Please create subtitle option. What do you mean? I'm not sure whether I understand subtitle caption, Hamza. Ooh, oh God, oh God. Oh, Joseph joined. Welcome, everyone. Welcome. Good morning, Mom. Daniel from Nigeria. I will my account first time with it, but I know. Okay, I'm gonna share that. Even Daniel, you share your name, so I don't know whether you sharing with your name with this. Into the public, but I guess for commenting, you're okay with it. So, but I know my mistake. That's you know what that's key for success. Understanding what we're doing wrong and trying to fix it, not to repeat it. That definitely shows that you're in the right mindset, my friend. An excellent mindset, actually, because it means that you're not how can I say that, selfish, or from people that they're like just stick and like insist that they are right. And that's key, because the worst thing and the most difficult thing of all is to go against our very own ourself, to actually understand our mistakes, that sometimes we are getting driven by our emotions, and etc. So understanding what you're doing wrong, that's the proper mindset, my friend. Good luck. And if you allow me, I don't know what the mistake is because you haven't shared it, but it might be a combo of things. Okay, I don't know whether it's something that you didn't follow your strategy, or you have, I don't know, you haven't done a proper risk management, or we just left everything behind and just stick on I don't know, maybe you saw you were on profit and you just insisted, or the vice versa, you were on loss and just insisted on keeping the position open, and that's why you managed to blow out your account. I don't know what the mistake is, I'm just guessing. So if the reason that you lost, that you blow out your account, was not sufficient risk management, I guess you didn't have any stop loss or insisted to keep a losing position open because you thought that it will reverse or something. Then if that's the case, please, 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 please do some risk management. Set your stop loss, set your position, even a trailing stop. Do something just to make sure that in a single position you are just risking just a small percentage of your account and not your entire account. Don't be patient. Little, and account can grow. Okay, as long as you're patient enough. Okay, good afternoon from South Africa. Good point. Good point, Yusuf. Can you double check that in YouTube you can click captions? Not sure whether I can do that from here, but I think you can definitely do that, don't you? No? I think you can see in the YouTube live at the bottom of the live, okay? There is a let me try and find out actually, just to help you a bit. I don't know whether you possibly are you're using. Oh, you're right. It's not enable. I don't know how to enable it. I'm afraid. Let me give me a second, okay? Give me a second to try and know how to. Afraid. Uh, You know what? Okay. I guess our friend Hamza is not an English speaker, but don't worry about it because if I'm not mistaken, let me type him. Once the live finished, the CC option will be available. Okay, I cannot spend a lot of time on replying in written over here. I'm doing my best. Okay, so hopefully that cover has Hamza. If you can fix it. I think it's a matter of live streaming, I'm afraid, Hamza. So take a break, do whatever you have to do. And once I'm done and finish the session, you will be able to see the captions as well. If not, please contact me directly. Send me an email at webinars@hotforks@agefm.com or social media or something. And I will redirect you to our Arabic speaking analyst, Bassam, and you can actually join him every single time that that is going live. And in general, you can even contact him to have a chat with him. Okay, so guys, I can see a lot of questions. I need to go back in the beginning. I need to preview up first before we do the live analysis and go straight to charts because we're already 10 minutes live and we haven't done a single thing yet. Okay, so let me brief you up a bit. The key events of the day so far, it was a Japanese PMI this morning, the Chinese services indices, and earlier, just a few minutes ago, it was the Eurozone's producer price index and composite PMI. Okay, so that's why the very first asset that we're gonna cover is euro dollar. But before I go to the platform, I would like just to brief you up a bit of what happened. Okay, so the euro, I will go vice versa. I will cover a bit the what happened with the euro. Okay, and actually, while I'm talking, I can also share euro dollar as well. Zoom in a bit. Let me share it with you. I know that you cannot see it right now. Bear with me. Perfect. We're good. Okay. Okay, guys. This is euro dollar 30-minute chart. And the reason why I'm putting this on is simply because of the latest inflation figure from Eurozone and producer price figure from Eurozone as well. So why was so important? Why? What happened? Actually, to be honest, it looks that euro dollar didn't react as much as I thought, or the analyst thought, the economist thought, etc. So as you can see over here on the announcement, we had a bit of a, I will put the 30 minutes, yes, on the announcement. And post the announcement, we have seen some kind of a support after the inflation figures over here. Okay. But the thing is, there we go. Okay. So what happened? First of all, just double checking that you can see me as well. Perfect. Yes, you can. Okay, so what happened? Why we had this pullback of euro dollar, so dollar gaining against euro ahead of the data, and actually during the data release, and why it has supported so far today. So far, actually, the last 30 minutes, it was supported the last 30 minutes. So we had seen Eurozone inflation decline, actually consumer inflation expectations, to be more precise, declining. So what that means, guys, this is a survey that ECB is releasing, is composing and releasing, showing that expectations for the year ahead, okay, for actually it's a survey regarding the 12 months period. The expectations for inflation have dropped back to 3.9% in May from 4.1% in April. So what that means, it means that that nerves have calmed down a bit, and that it seems that inflation it eased a bit the pressure in regards to the concerns around inflation. It presents it's an indication that inflation will continue to cool and calm down and slow down and etc. So this is something that we might see the doves in the ECB, the dove members, the members of the ECB, the ones that they don't want any further interest rate hikes, they might argue about that. They might base their opposition to another rate hike based on such pullback in the consumer inflation expectations and also the producer prices seen earlier today as well. So that would be a lot of argue between doves and hawks based on these on today's releases. Okay, so okay, it's not a key indicator about what ECB is expected to do. However, the fact that we have at least this indicator and we have at least seen some kind of a not a slowdown. We have seen like the price pressures um, abounding a bit, slowly abounding. Okay, so that's positive. That's positive. Okay, obviously we need to remain and see the actual figure to see whether it will confirm the actual inflation figure and whether it will confirm that indeed inflation is cooling off and is declining slowly. I would definitely confirm and pressure the ECB to stop increasing interest rate hikes. However, for the time being, the odds based on all the figures so far, inflation, labor, manufacturing, everything points, and based on the forum last week as well, right? The ECB forum in Vienna, statement by Ms. Lagarde, repetitive statement, all point out to another rate hike this month, okay? So it's still on the cards, and actually there is another one expected in September. So this scenario doesn't change for the time being. Okay, today's figure, they have added a bit, they have showed a bit that there is a sign that the inflation pressures are slow in abounding, but it's not enough. Not enough, neither the consumer inflation expectations today, neither the producer prices today also show they fell also in May. And actually, the producer prices in Eurozone, they fell for the first time since the end of pandemic, since the end of the 2020 pandemic. It's the very first time that that since the pandemic, since the end of 2022, that the annual rate in producer price index is in a negative territory. But again, these signals, they are a bit mixed. These signals, however, are not enough to prevent the ECB from hiking rates again in July. Not sufficient. So we still see a rate hike in July and another one in September. Okay? So September is under question right now, but yeah, definitely not enough to change the central scenario. So let's get back to the currency, guys, to the euro dollar. As you can see, dive after this data, mixed data that don't support, as I said, that ECB will change its mind. But what has supported, you see that we have a support. It's not moving further to the sideways. It has some very short term support the last 30 minutes. That's mainly due to the ongoing ECB comments. Okay, so we have Visco just a few minutes ago. We have Nagel also a few minutes ago. Both actually opposed. Nagel, sorry, supports that further rate hikes are necessary for July, and for September it didn't openly support the rates, but definitely for July it's like he said that pretty much hinted that it's a done deal. Visco on the other side warned against over tightening, so it's against any further rate hikes. That's why we have seen euro dollar a bit undecisive so far today, okay? Not so far today, the last 30 minutes. You can see that it got supported, but also remains in the low territory of today's session, okay? So this is because of the mixed economic data and the mixed comments from ECB, okay? But okay, the intraday basis, this is the euro dollar. It's a bit mixed. It's pretty much sideways. My fast moving averages, as you can see, very narrow. Not okay. They stop pointing lower. So there is a bit of an uncertainty right now whether it will continue to the downside or whether it will consolidate. The same stance as you can see in RSIs at 46 and flatten, MACD at 0. So a lot of sideways consolidation, neutral picture right now, intraday. Overall, however, have in mind that, so let me zoom out as well. I want to show you that. Okay, this is enough. So, in the meantime, in the medium term outlook, euro dollar remains under pressure. Okay, that's the deviation between the US economy and the European economy. Um, that's why it remains actually it has formed. This is the daily chart, guys. It has formed, looks like a descending triangle. If I connect the tails, okay, connecting the tails, it looks like a descending but a triangle, but with a flat bottom. So still, dollar remains slightly stronger against euro. But it's important for us to see whether it will continue downside. But confirmation about a putback down to 107, 106.30 area can only be seen as soon as the asset breaks the two, not two, two, three, one, two, maybe three, no, yes, it's actually 3 week support at 108.30. That's a very important level to be seen, and a very important level to be closely monitored, because if it breaks, it opens the door to 107 and 106 territory. Now, I will zoom in the 4-hour chart because I want to help a bit the intraday traders, even 1 hour, why not? Indeed, our asset remains is consolidating in the near term, but as you can see, it keeps slowly move lower and lower and lower. Actually, you can see that in the euro in the 4-hour chart. Can you see the descending triangle that I was referring to? So swing down, sharp selling, correction, lower, high, sharp down, same, pretty much same floor, recovered, but failed to extend higher, so another lower high. Right now is pulling back, but as you can see, for 5 sessions, 4-hour sessions in a row, it hold in that range between 108 ATC, let me just be precise, 108, okay, 60, 108, 90. So it's ranging since yesterday afternoon, is ranging between this tight range between 108, 60 something, yeah, 65 and 109. Okay, 109. So ranging. Actually, I would like to make it even more tighter, but I can't because we had this leg up in the European Open and leg down afterwards. That was actually Asia and European. Asia data and European data that has sparked higher and they quickly turned down, with the asset hovering around, holding this range between 108.60 and 109. So, my dear friends, sideways in the short term, remains under pressure in the medium outlook, but 108 is key, 108.30 is key to be broken. Only if we see it below that level, we could turn our attention to 108, 107, 106. In the meantime, for those that you're trying to find an immediate support level today, use your 1 hour or 30 minutes Bollinger Band area. If I zoom in, you will be able to see that Bollinger's at 108.70 and the bottom of the day at 108.64, 65 are our immediate support levels, with a sharp selling the last hour and the asset failing to recover and holding on the low level of the last hour, as indicating that bears remain in control. This is the 30-minute chart, and you can clearly see that doji candle at the bottom of the sell-off, okay, implies that still bears are finding, bears are trying to push the asset lower. So we indeed have a consolidation in the very short term. So, but exactly because it's a consolidation, the top and the bottom line of the Bollingers could really help us with some support and resistance levels, some barriers with the market, with the asset swinging between those two barriers. Okay, let's move on. Where is your questions? I wanted to share something about Japanese and Chinese PMIs and etc. But let me check your questions and I will cover everything as we move along. Okay. So questions. Hmm. Hello. Again, it was Eurocad and Pound Oz. Allow me, Mikey, to start with Pound Oz. And the reason for that is the Japanese data, the Chinese data affecting obviously Aussie, and the UK data affecting obviously Pound. So we have with this way, I will be able to cover also the fundamentals in regards to UK and the Asia region as well. So, Andrea, quickly, Andrea. Pound, Aussie, pound nose. Here it is, pound nose. Okay, here we are. Okay, zooming out a bit, just for you to see this nice. Can you see that? Okay. Guys, what that reminds you? I hope that it reminds you of something. Cap around in top, around the bottom. Who knows? But definitely something that we should keep an eye on, at least for the from the technical perspective, because it looks like a cap. It looks like a rounding top. Sorry, bottom. Very contradictory patterns. If it's approved as a rounding bottom, it's supposed to be a bullish formation. If it's proved as a cap and handle, then it's a bearish formation usually. So it depends how it will break the pattern. If it's break to the upside, that suggests a bullish formation and bullish cap and handle. So what happened over here? What happened over here? Why we have seen this impressive jump higher during the Asia session? That's a comp of things. Remember that antipodians in general moving to Aussie. So what we have over here, we pretty much have a weak Aussie against a strong pound. However, in today's trading, it's not about strong pound. Okay, it's only about a weak Aussie. Antipodian currency, risk sensitive currency. Okay, so don't forget that. So overnight, overnight. Overnight data in Japan and China have a strong correlation with Aussie because they are related countries. They have trade relationships, okay? So that's why this morning's Japanese service PMI and the fact that it fell in a combination with the Chinese Haixin service index that also dive, okay? They both, more precisely Chinese, to be honest. Chinese just added on the concerns over a pretty sluggish, tepid economic recovery in China. So the data, the Chinese high Xin service index, the fact that it dove in June, also it was the slowest pace of activity seen since the beginning of the year. So this was these data are pretty much okay. They present a really tepid spending over the Dragon Ball holiday, but they just add to the concerns in regards to a very sluggish economic recovery in China. That's why Aussie was negatively affected by the data overnight. And obviously, let's not forget RBA, right? RBA did nothing. It came in line with expectations, didn't change its decision to keep rates. Actually, it kept rates unchanged as it was expected. So, so that is something that, along with the fact that the governor actually stated that further hikes are still on the table, regardless that this time they didn't, they remain on hold. That was that on the back of the head, that the fact that, okay, I might have confused you, one step at a time. The action for RBA to hold rate and change as such found some support, provided some support to the Aussie. However, Mr. Governor Low's statement that further rate hikes may be necessary, okay, in combination with the Chinese data, is something that added pressure on the Aussie, okay? And that's why we have seen pound over here gaining ground against Aussie since the Asia Open. So, and extended it to 190.76. However, as you can see, the last hour, okay, last hour, we have a pullback. Okay, it was anyway over bought, as you can see. Our last three candles were outside Bollinger's, suggesting an overbought condition. So this actually, this pullback the last hour might be a correction, but a correction also affected by the UK data as well, even though it was earlier. So it was much earlier. It was this morning. So it was how many hours ago? Yeah, 3 hours ago. So the fact that the UK service sector loses momentum is just signaling on the slowdown of the UK economy. Nothing else on that. So we're still having, we're still expecting Bank of England to increase rates not only once but twice. We still see the cost pressure high, even though they may moderate a bit. And yeah, still we have a lot of wage pressures as well. Labor market remains tight. So there is nothing positive around the UK economy and pound as such. Okay, but the fact that RBA hold rates, but Bank of England expected to increase rates, is something that provides some kind of a floor to pound Oz, and this might also be the reason why pound looks to benefited since the mid of June against euro, because after all there is a big yield differentiation, with Aussie also affected by China and the sluggish recovery. So theoretically, fundamentally, based on the data, based on the central bank's decision, Aussie expected to remain weaker against pound. But this is just for you to have at the back of your head, back in mind the rest of the fundamentals. Now, technicals. We have seen that it reached a peak, okay, around, you know what, I will put vice versa. The reason for that is because I want to, next time, if it extends higher, I want to have my next Fibonacci levels, much expansion levels as resistance. So after this rally that we have seen in June, posting a high at 192.40, 192.38, somewhere out there, we have seen a pullback for 1, 2, 3, 4 days in a row. Today, found some floor. I would like to zoom in. I would like you to see this floor. Can you see this floor? For 3 days in a row, it held above 189.74. So key support level, just a breath above the 61 Fibonacci level over here. So very, very important level to be closely monitored, especially by intraday traders, because this 89.75 level, if it breaks, let me go to the 1 hour chart. Can you see that? If there's a pullback to 189.75 and breaks it, that could sign a reversal and could turn the attention to the 50% retracement level. This is somewhere around 188.90, 189.60. So it's nearly 100 pips move. If we see a decisive break of 189.75 and more precisely a decisive break below 189.50, this could open the doors to the mid of this leg. Okay. Okay, but I said to you, this is a photo. I said that looks like a cup and handle. So keep an eye on what color shall I do it? I will do it with this. Not ideal. No, I don't like it. Let me fix it a bit, guys. Okay, guys, it looks like a cup and handle. There are some rules about cup and handle. If the handle stays above 61%, okay, and breaks this immediate resistance, okay, at 191 actually, let's round it up. This will be the very first sign that is a cup and handle and a bullish one. Confirmation can come as soon as we have seen our asset breaking the neckline of this cup and handle. Neckline is when we join the line that joins the two highs. So that's around 190, 160. But yes, a break above 191, which coincides with the this multiple resistance level over here, Bollinger Band as well, is a round number as well. That will be a bullish signal and an indication that we might see a full cup and handle being formed. Okay, so 191 could open the doors to 191.60, but as soon as we have a decisive break of 191.60, then the doors could open further to the upside. I need to put the daily chart on for you to see, and I'm referring to the peak of the month at 92 level and even greater. Let me just come on, Andrea. No, can't. Okay, let me find another way. Give me a second. Very good cross, dear Maggie. Thank you for bringing that up, by the way. Okay, I would like to find some immediate resistance areas as well. So I will use my favorite Fibonacci expansion. Okay, so that indeed, oh, nice, beautiful. Can you see that the 191.60 territory, it also coincides with my 61.8 Fibonacci extension? I'm saying that, guys, because a move outside this handle, above this candle, breaking 191, then the next immediate support resistance level for intraday traders will be at 91.63. Then we go up as high as the latest high, which is at 92.40. Then 92.70. Come on, Andrea. And 161 Fibonacci extension goes as high as 194.60. If you want something closer, then try to find the mid level between 100 and 161 Fibonacci extension. So that's pretty much it for pound Oz. As I said, a fall below the 61%, below the 89.75 level could open the doors to 50% Fibonacci level, okay, at 88.67. So let's move on. Euro CAD was the other one that you asked, dear Maggie. Let's do that as well. Euro CAD. So this is the weekly chart. The reason that I put that on is only because I want you to see how important this support is. It's a support that has been held since last year, October last year, actually November last year. Okay, so have this, like, put a note on that area because it's a key support level in the long term. And the asset is consolidating above it for 1, 2, 3, 4, 5 weeks in a row. Let's zoom in the daily chart. Okay, so after a down leg in May, sharp down leg, is getting back to this floor, the one that I said earlier that is held for since November last year, sideways, hovering between 143 and 145 level. It looks like it's having some kind of wrong indicator, sorry. It's looking like it's having some kind of an ascending, a very narrow ascending channel. Let me fix my standard deviation. That is not correct. Oh, that's slightly better, not sufficient. I'll use the much better, much better. Yes, so yeah, much better. Use regression channel for that one. So you can see that it's having some kind of an up channel, but the slope is very, very, very narrow. So yeah, it's in a pretty it's a pretty neutral mood. Okay, not excited about that one, to be honest. So overall outlook is neutral, sideways. Key support level is the one that I just mentioned. This 9 months bottom, and coinciding with the Bollinger Bands in the weekly chart. So I will zoom in the 1 hour chart just to see what's going on today. So it moves along with the pound Oz as well. Okay, Canada is Canadian. We have a pullback actually, a sharp rally, doji candle, a pullback as a correction because it was overbought, and it looks like this is an evening star formation. So it opened the door to immediate support at 144 30, also to the 20-day period moving average at 44 10 44.06 territory. Let me check a bit what's going on, but very mixed. Very mixed signals over here. We have a pullback, but momentum MACD is positive, though with the signal line below zero. RSI is slowing down, it's come down, but it's still very close to the high, to the positive territory, to the it's above 50, so that's positive. Stochastic also hovering in the overbought territory. So it looks like this is just a pullback, a correction of this overbought condition, and that the bulls are still in control. So this is like looks like a correction before another attempt to the upside. Because overall, momentum, as you can see in the daily chart, is decreasing. The negative momentum is decreasing. Okay, so keep an eye, guys, on 144.30. If it breaks, next support is 144.06. But if the asset holds its gains and remains above 144.40 the next few hours, so that will be a clear indication that this is a correction, for the correction or some consolidation because it was overbought. Let's move on to the next questions. Gold, obviously, gold. Oh my God, a lot of Tunisia. Welcome back, Zoo. Welcome. Okay, gold. Okay. Sorry for that. Just so daily chart. I'm always starting with something like that because I want you to have a range, the overall range. Okay. So the overall range is important because it helps you to realize where the asset is standing right now. Okay, where is standing? So right now, let me zoom in. You can see that the bullion, it had actually pretty decent rally the last 4 days. Not a strong one, pretty decent. Okay, pretty decent for gold. Um, Sorry, I'm a bit running out of steam. Um, yeah, it's oh, I need some water. So, um what I wanted to tell you. It's mainly driven, as you can see, as you know, in general, gold is driven by central banks, interest rate decision, concerns around Chinese demand. But the fact that it has moved to the upside the last 5 days, yeah, is due to the improved risk appetite. Okay, so the fact that stocks markets have found the support, that we have in general improved risk appetite, that provided some demand for gold. Okay, especially because the dollar is a bit remains supported. So yeah, that's definitely something that supported the gold, even though that support, it looks a bit limited. Okay. So we have it looks like a correction, a limited bounce due to this um, risk, the improved risk appetite. So let's see a bit what's going on. So Doji rebounded 1, 2, 3, 4 days to the upside, crossing the midline of my down channel, right? Midline, crossing above it and stay above it for 2 days in a row. But regardless of the bounce, it remains in a downwards channel. So it could retest the 1946 level, which is at the upper line, the top of the channel, and quickly turn back down again. So keep an eye on the top of the upper channel. It could retest it before another pullback to the downside. If for any reason, any ad hoc reason, the asset and the bound find demand, and limited demand, we could see the retesting even 1970 territory, but neither fundamentals, neither technicals imply to a bullish bias for gold. It's a vice versa. You can see from MACD, negatively configured, RSI remains below 50, so everything indicates that this is a recovery, a rebound, but the asset remains in a downtrend, down channel, with the edge of the Bollingers, 1934 and 1946, our immediate resistance levels before another turn to the downside and a continuation of this channel. Let me go to the 1 hour chart. So, decline since Monday, found the support at 1921, and currently, sorry, that was yesterday's dip, sorry. This morning found some support. It was the risk appetite, as I said, safe haven. So people turn to gold in the Asian European session. So we have this bounce, which it looks that it has faded already. So faded because after the posting a 1929 high, it came back down and remains under pressure. So both intraday and overall outlook remains negative, with these swings that we are getting to be correction of this overall negative outlook in gold. So, dear, 1929 resistance level, but a break of this latest tail at 1926 could open the doors to 1924 and yeah, 1922 level as well. Okay, so next question. Hopefully that covers you, dear Albert. Both are important, Cameron. Both are important, definitely both. Okay, if you are a very, very short term trader, I mean, 1 minute, 3 minutes, 5 minutes, 15 minutes, then you're strictly on the technical analysis side. But that doesn't mean that you don't need to be aware of any economic releases, because if you decide to take a position during a major economic release, few minutes before it, or then you need to at least know what the agenda is having to avoid any stop out. Okay. Hello everyone, South Africa, Kenya, Nigeria. Someone is spamming me as well. Thank you, Hamza. Analyze DAX. Nice. Nice. They don't often ask me about an index, especially European ones such as DAX. Nice. Nice. Catch. Why not? Yes, of course. Of course. DAX, JER 40. Where's my JER 40? JER 40. JER 40, JER 40. Where's my JER 40? Come on, Andrea. Oh, it's hot. Really hot. Here it is. It was at the very bottom. Okay, guys. I put the future contract on. So, actually, yeah, here we are. DAX. Nice, sharp, deep decline since yesterday. Actually, the whole July, from the beginning of July, with the German economy, in general, the European economy, adding a lot of pressure in the DAX, 1, 2, 3 days in a row to the downside. But it's the sharpness of this decline that adds to the bearish move for DAX. Regardless if of the latest, regardless of this channel that is started to be created, this is a sharp dip similar to this one that opens the door to 16,000, and to be more precise, not only 16,000, it's actually 15,900 territory, 15,860 as well. So just a second. So as you can see over here, there's a sharp slope, okay? So there is an indication of further decline based on the latest economic data as well, that presents a sluggish recovery in Germany as well, and Eurozone, adding pressure to the index, to the DAX. So MACD ready to turn negative. There was a decline. There is some kind of a diversification over here. Let me double check. This is the daily chart. Yes, there is. That's key, actually. As you can see, we have seen DAX rising, right? But actually rising since the beginning of the year. But MACD, it was declining. Guys, this is diversification, okay? That's an indication that we need to be imminent and wait to see whether there is a reversal in the near future. Yeah, so key diversification in DAX since the beginning of the year. As was the DAX rising, MACD was declining. It's very, very close to the zero level. So yeah, you need to keep an eye on it. Okay, that's something that you can have like for the medium term picture, because we might actually see the next few weeks, who knows, a reversal of this year-long rally that we have seen since the September last year. Okay, diversification spotted. We might see DAX reversing in the upcoming weeks, so something to have in mind, but nothing certain. Okay, we need to see a decisive break, especially below the 1500s. Actually, yeah, below 1500s territory or tighter. Yeah, 15, no, 1500s territory, 15,000, sorry, 15,000 territory. We need to move below 15,000 in order for this reversal to be confirmed. In the meantime, let's go to the intraday setup. This is 1 hour chart. As you can see, nice sharp decline, extending lower, MACD negatively configured, RSI at 30, further space to this downside to be covered. So yeah, negative outlook for negative picture, negative configuration, the asset negatively configured even in the intraday setup, 1 hour chart. Keep an eye on the next support level, which falls down to it's the bottom, is the channel. You can use the trend line as immediate support level, but this is far away, so we need to find some immediate support levels as well. No, sorry for that. So, just a second, just a second. So that the resistance that we have seen back in 23rd to 27th of July, so the 16,000 is the very first support level for the asset. And the very next one is the trend line that I draw earlier. Is the trend line that I draw by connecting the daily lower tails. So 16,000 and 15,900 are the next immediate support level, both in the near term. Actually, within the day, within the week, these are the two key support levels. There is no indication that it will move, it will recover to the upside. But if we see this support sustain, then the asset needs to cover this gap. So this is the resistance, the immediate resistance level for DAX, my dear friends. Next question. Next question, next question. Where are the questions? Oh, what am I sharing? Oh, sorry. What's that? I shared my Chrome by mistake. Really sorry for that. Where is my screen? What happened with my platform? Sorry, guys, just a second. Not easy to do it via. Okay, so that was DAX. Where's the questions though? Where is your questions? Okay, here we are. We are back. Zoom ID. Unfortunately, Heavy Mind Design, we don't use Zoom. We tried to use it. There wasn't a lot of attendance. I think people, the majority looks like it prefers social media. So yeah, we no longer use it. Live from Uganda. Perfect. Welcome. Uganda, Nigeria, Kenya. Welcome, guys. Welcome. Hopefully, you are visited our premises in Kenya. Hi, Andrea. You look. You thank you, Ratal. So, what's your question? Can you please analyze dollar yen, Aussie dollar for me daily, 4 hour, 1 hour? Of course. Okay, let's start with dollar yen. Dollar yen. Actually, let's do Aussie because it will be straightforward, especially after we cover pound Oz. Okay, pound Oz. So our little antipodian risk sensitive asset. Come on, it's my internet. I'm afraid. Sorry. Oh, what happened? Sorry, guys. Just a second. It's my internet. They kicked me out. Come on. Something is wrong the last 5 minutes. Something is definitely wrong in the last 5 minutes. Just don't know. Why is that? Come on. Yeah, it's my internet. I'm really, really, really sorry, guys, if I cause you any troubles. I'm back. It's back. Thank God. We are back. Aussie. Okay, let's do this with Aussie. Daily 4 hour and 1 hour is what Oratal asks. So as usual, I'm gonna start with my daily one. Okay. And you know what? I'm gonna clear a bit this mess. I would like to do it a bit plain. Bulge band. No, not this one. Sorry. Okay. Yeah. Okay, perfect. And you know what? I'm gonna even delete. Yeah. Yes. So this is the daily. Okay. The reason why I do this is because I want you to see a bit the chart a bit naked. It's not naked, but you can see the candles. So let me zoom in. Okay, we had a sharp drop in the beginning of the year, consolidation, some kind of a recovery, fell, however, key level, key support at 0.65, that was a key support for the year, broken in May, dropped below it, declined, did a sustain and came quickly up. The reason why I'm taking it so far away back is because I wanted to highlight the importance of this level. You see, because it's a level that was retested once again last week. The asset, regardless of this sharp fall, which looks like a pyramid, it held above this floor. This is years resistance, a support, crucial level for you to have in mind. More than a year since November 2022, greater than that actually. It's actually, guys, is a level that has provided support for Aussie since October last year. Very, very important level to be seen. And you might tell me, I don't really care. It rebounded. So what shall I do next? Okay, I'm not gonna tell you what you will do next. I will leave you to decide. But have in mind that a move back on that area, it could open the doors to the bottom of May, if and only if we have a decisive break like this one. Exactly because this level is such a strong support level, easily the asset could retest it and rebound above it again. Retest it and rebound, retest it and rebound, something that we have seen for several months. So it's not a level that it can easily be broken. Okay? Have this in mind. So we have a recovery, a rebound for 1, 2, 3, 4 days in a row. Today, pull back after the um, after the overnight data. It has pulled back down. So that is it's mainly dollar strength than an Aussie weakness, and is staying around the highs of 66 territory, not 66 levels. So overall, it looks like it's trying to gain some ground, but it cannot really post a confirmed bullish momentum yet. So we have a pretty neutral outlook, guys, in this one. So get the Arato, you need to be careful because regardless of the rebound, we have a lot of neutral signs. What I mean by that, recover the majority of yesterday's gains. It came back to 23.6% Fibonacci, which is a pretty weak support and resistance level. My 50 and can you see this? My 50 and 200 period moving average both are flat, confirming consolidation. You see, flat. I'm using the exponential ones in this case. MACD is at 0. RSI is at 46.90, again close to 50. And that is, so all the signs, all the indicators that we have used, they show consolidation. Okay, so For the time being, for the near term, there is consolidation. So the best thing that you can do is just put a mark on yesterday's bottom, put a mark on the yesterday's high, which coincides actually is a breath below this 38.2 level, because this could act as your immediate support and resistance level. A move below 66.40 opens the door to the area, to the important area that we mentioned earlier, the 65, 80, 65, 70 bottom, while a move and a break of 67.10, which is our 38.2 Fibonacci level, could push the asset to retest the 50%, which also coincides with the 200 exponential moving average. So this is somewhere around another 38 to 40 pips higher. Okay? So, dear Oratile, daily Aussie is sideways. Keep an eye on these two immediate support levels and resistance levels. 4-hour one now. The 4-hour one, support and resistance, I'm afraid, is the same. Nice floor, 66.40. Nice resistance, 67.10. Pretty flat. Pretty flat moving averages and indicators. Small body candles. There is a pullback the last three sessions, but still the 66.40 could provide a sufficient support. Okay, so there is a pullback. Let me go to the 1-hour chart. We will be able to see it clearer. So intraday, referring to 1-hour chart, 4-hour chart, 30 minutes chart, we have a negative move. So eyes are turning to the immediate support level, which is at 66.40. Okay, with MACD, as you can see, cross negative. RSI is flirting with the 30 level. Let me put my 5 and 9 as well, 5 and 9 template. Yes. So, summarize, my dear Oratal. So, intraday, 1 hour and less, and 4 hour actually. Intraday, we could see the asset turning further to the downside, retesting the 66.40 bottom, okay? But overall, it remains sideways as long as it doesn't exit 66.40 or 66. How was it? It was, let me do this again. Sorry, I need to redo it. Yeah, as long as it doesn't. So, daily, key resistance at 67.10, key support at 66.40, but daily chart remains sideways. Intraday, there is a negative bias that has started since yesterday afternoon. The asset remains under pressure. We can see that moving average are pointing to the downside. MACD turned negative. Stochastic shows that there is further steam to the downside for the next few minutes or an hour. RSI flirting with the 30, so it seems that there is further ground to the further bias to the downside. With the next immediate support level of 66.40. So that hopefully has covered you, my dear Oratal. Oh, you said Aussie yen as well. Dollar yen. Dollar yen. Let's move on to dollar yen. I think I'm gonna speed up a bit because I'm already an hour and a half live. So daily. Daily. Do I really need to analyze that? Guys, dollar yen is a safe haven. We have huge yield differentiation between Japan and the rest of the major economies, such as US economy. This is what 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 is responsible for this sharp rally, which is expected to continue for dollar yen since the US increases tightening more than 5%, but a Japanese bank stays ultra accommodative, and that's why this is what boosted dollar yen higher, along with this capacity as safe haven. So momentum, as you can see, positively configured, increasing. If I zoom in, you can see up, higher high, higher high, higher high. So it looks like one way for the time being. Nothing to indicate that this trend will change. Okay, you can tell me, but Andrea, the last few days is stuck. Okay, every single trend needs a correction. Every single trend needs some correction. Some it might be overbought, it might be oversold. So this is what we are seeing over here: sideways movement before further upside. Um, More buyers enter the market. So this is pretty much it. So you need, this is a range, and you should use this range as key, as a sign for a resumption of the uptrend, or an indication of a pullback. A pullback, though, doesn't mean that the overall outlook will change. It doesn't mean that this long-term rally will stop. A pullback down to 20-day moving average, it looks pretty logical, right? But as long as we don't have a signal that it will pull back and it remains sideways, try to that just doesn't change anything. I mean, we need to see a break of this range to the downside, not to suggest that the asset could retest the 20-day moving average and 142 territory. Okay, it's just some pullbacks and corrections that every single sharp rally or sharp decline needs. Overall outlook, dear right, remains positive. So zoom in, we'll zoom into the 4-hour chart, show you this range, okay? Actually make it even more beautiful than it is. This is properly, this is the proper range, okay? Because it's a repeated floor and the latest high. So it is in the range between 144 and 145. Currently is at the mid of the range, so really neutral. So keep it in mind, keep monitoring it just until you see a break below, a decisive break below this range could retest the 143.50 and let me just 143, actually round number 143, 143.50. These are three consecutive support levels: 143.50, 143, 143, 42, 40 are the next immediate support levels if and only if the asset exits the range to the downside. If it moves further to the upside, if it breaks it up, if it moves above the range, exit the range, that will be an indication of a resumption of this rally. So that's just one way, and it's just takes us back to October's, September's 2022 highs. So 146, 147, 148, 150. Okay. Okay. So why it's coming and going all the time? A lot of questions still. I have covered gold. You are referring to cable, I guess, Daniel. Cable. So cable supported by the 20-day moving average, but Small body candles in the daily chart, just adding to the indecision that there is in the cable. Let me zoom in the 1 hour chart. A lot of volatility still jumping between 126. So you see, there is a lot of these kind of large tails, contradictory tails, suggesting decision. So better to monitoring it before you take any decision. You need to be sure. Okay, the fact that we have a large tail up, the very next moment a large tail down, another large tail down. So it shows that it gives the impression that it's turning is negatively configured, especially if we consider the consecutive down legs along with the decline that we have seen in momentum. But you see, momentum is still at zero, so there is not a confirmation that it turned negative. RSI is below 50, but it's pointing higher, so there is a lot of indecision in cable right now. So um, just be a bit patient with cable, guys. 126.80 immediate support level. You see the Bollingers are shrinking, confirming the decision that I told you earlier. Another support, this goes down to 60, 160, 26, 55, 58. Small body candles though, so I'm afraid it's neutral, Daniel. Neutral from the time being. It needs to settle down a bit. Okay. Welcome, Vincent from Kenya. Welcome. You are allowed to ask anything you want, Amanda. Gold, we have covered gold. Yes, you are allowed to ask anything, guys. Just type it. Just type it. Okay. Ora ciao. That's a very appropriate way, of course. Of course. It's one way to identify support and resistance levels. But it's that's solely you need to actually try it because it's something that it might not help you personally, but yes, can repeat it, candle highs and candle lows. So if Anna said it is several times the same area or approximately the same area or approximately the same low area, this is this an imminent support and resistance level, and yes, you can use it. It could even be used as target and stop loss, okay? Risk management, don't forget that. We have covered gold. Are you going to analyze this chart so we will be able to see if we buy which chart? I have covered everything that you asked so far. I have done dollar yen as well. I have done gold as well, guys. Yes, gold. You are welcome. You're very, very welcome, dear. Clement. Guys, anyway, if you didn't join on time, as soon as we finish the session, the video stays there so you can go back and forth and see all the assets that we have covered, okay? So don't worry about it. Don't worry if you have missed gold. Don't worry if you have missed pound O's, euro O's, euro CAD, euro dollar, dollar yen, Aussie dollar. You can just drag and DAX. You can drag and drop and you will be able to see them again. So we have seen dollar yen, we have seen gold. Let me do DAX and Dow. Just a reminder that earnings season starts next week. We have the big banks next week. We have United Health as well. So guys, you need to be a bit careful with your indices and in stock investing if you're an investor as well. Earnings season is very, very important. It provides us insights regarding to our stock trading, stock investing. Don't know what kind of person you are, whether you're trading and investing, where you are in trading only, but it's definitely a period that does a lot of volatility, and it's very, very important for investors as well, as it gives them a insight in regarding to their investment and whether the particular company will continue growing or facing any risks, and etc. So in regards to Dow and Nasdaq, very, very quiet, dodgy move so far. So let me zoom out a bit. And the reason for that, sorry, just a second, is the reason for that is that we have a pretty mixed stock and bond market. Is the raft of confidence indicators from Asia and Europe signaling a slowdown in activity. Chinese PMIs, as I said, disappointed. Final Eurozone PMIs slightly lower, just adding to the growth concerns. So that's why we have seen in general the major indices, US indices, DAX, FTSE, a bit. Okay, DAX was under pressure due to the European composite PMIs, but US ones are mixed. It's all about the risk. It's all about sentiment. Okay, all about sentiment, and the sapped risk appetite is holding Dow and Nasdaq sideways. What else? So. Intraday, the 1 hour chart pulled back down, posted the bottom at 1500. But yeah, that looks like a limited decline. You can see that our moving average started like they have a narrow slope. MACD is still negative. Stochastic though, which is the one that I use for my for the intraday setup, such as 30 minutes and 1 hour, you can see that it started pointing higher. So we might see the asset finding some support here unless something happens during the US Open. So yeah, wait for the US market open. 1500 is a key support level, which if it breaks, it could brings our asset back down to 1504 or 040, 15040, even 1500s, just round number 15,000. Sorry, what am I saying? 15,000. So ahead of the US market open, we have seen some pressure. It looks like it has faded, but if the asset moves below 15,100, then doors open for 15,000, 40 and 15,000 territory. Same stands for Dow. Pullback overall the overall movement, the overall we've seen a pullback actually since Monday, a pullback after the rally that we've seen last week. Pullback, but it still remains above the 20-day moving average. So for our Dow over here, there is much further selling than Nasdaq. You can see that it has consecutive bearish candle. The slope of the moving average clearly points to the downside. MACD is negative. RSI is at the oversold territory, and it keeps pointing lower. Stochastic also, it's on the negative territory, still pointing lower. So in contrast with Nasdaq, USA 30 Dow Jones remains bearishly configured with the next support level. So it mainly is driven by the bears, with the next support level at 34,170 territory. It was an immediate resistance back in the 29th of June, sorry. And the very next support level will be on the June's last weeks of June's resistance. So 33995 level, 34,000, just to round it up. So the two very important support levels, 34,172 and 34,000. That's for Dow, which is still pointing to the downside, with bears being in control and moving average negatively configured. Guys, I'm running out of steam. I can see that there are a lot of questions, but ponytail, Andrea, when? Ponytail? I don't have a ponytail. Dear, we have Urdu lives. Please join. It's Adnan, our analyst in Urdu. You need to follow our Facebook page that is in Urdu. Can you contact our? Can you send us a message in Messenger uh, in order to give you a link for the Facebook Urdu page, please? So, guys, I think I covered everything. I will finish with euro dollar, okay? And I will call it a date. It's exhausting. So, euro dollar. When we started the beginning, I mentioned this triangle, the descending triangle. But who is here? Dabo. Dabo as for daily, weekly, and 15 minutes. Okay. Daily remains to the downside, so you need to keep an eye on this descending triangle double, because a break of 108.30 could open the doors to 107, even 106 territory for euro pound, for euro dollar, sorry, in the daily. So daily um, and weekly is neutral, it's sideways. We have three consecutive doji weekly candles, so it's neutral. But daily is in a negative outlook, so a break of the bottom of this triangle could open the doors to 107 and 106 territory. Basically, it could open the doors to May and June bottom. Now, 15 minutes chart. Okay, 15 minutes chart. What can I see over here? I can see that. Let me put my setup, the 5 and 9. So, guys, I will finish with this. They are double. Nice boost higher. The 5 and 9 exponential moving average just bullishly cross. Stochastic, you can see that is sharp to the upside. So, yeah, we have a nice bounce with which likely could could retest, not break, the 109 level, 109 and 109.6 level, 109.8 level. Yeah, so rising stochastic, bullish moving averages, RSI rising, turned attention to 109 and 109.8 territory. Yeah, that's pretty much it, though. It needs to break the high of the day in order to be able and see whether there is any possibility to extend further higher. For the time being, key resistance levels is the 108, let me be precise, 108.95, which is coincides with these latest swing high and Bollinger, so it's just 2 pips below it, and 108.97. This is a 15 minutes chart. So yeah, bullish cross, rising stochastics, rising RSI. Let me turn my RSI actually in a 7, change it like in order to be sufficient for a 7. Yeah, so you see, keep rising. Yeah, so there is some temporary bullish bias in euro dollar 15 minutes chart with the next important level to be seen in the 109.07. In case that, my friend, this level breaks, keep an eye on let me just quickly, because this is such a fast environment. So you need to turn your attention on this twisted top. That should be 109.15 level. Yeah. Okay. Okay, guys, I'm gonna call it a date. We have live for 1 hour and 35 minutes. I'm stuck. I need some water. I'm gonna call it a date. Anything you need anyway, we're gonna host um, an NFP live on Friday. Tomorrow we have a question and answer Instagram live as well. So feel free to join us there as well. I'm sorry if I missed a question, something for any of you that you ask about gold or assets that I have already covered. Don't worry. As soon as I end the stream, drag and drop the cursor and you will find the analysis for the asset that you requested. That's it. Thank you very much for attending. Hope you're having a great day ahead. And I'll see you again on Friday. Okay? Bye-bye.